Thailand with a falling baht caught in stagflation spiral with high inflation and low GDP growth. The significant and heavy impact of the war in Ukraine is hitting Thailand hard as it also challenges economies across the world as inflation bites the less well-off with anemic growth. All eyes over the coming months will be on Thailand's current account after it posted a larger deficit of $3.7 billion for May ahead of a $3.1 billion shortfall in April. The problem for the kingdom is elevated import costs driven by oil prices in excess of $100 a barrel and a foreign tourism industry that, at best this year, will only see 25% of the numbers seen in 2019, crippling the country's already limited prospects for significant growth. The Thai Minister of Finance has assured the media that Thailand was not experiencing a flight of capital from debt markets, as he said the government was monitoring the baht even as it continues to depreciate against the US dollar, breaking past the 36 barrier for the first time in over 15 years on Wednesday. It comes as the kingdom's current account deficit rose for May 2022 to $3.7 billion after a $3.1 billion shortfall in April, while the kingdom's economy, like others around the globe, is left facing the very real and perhaps inevitable prospect of an economy mired in stagflation with an anemic growth rate and persistently high inflation in force at least until the end of 2022, which could feed into a spiral. Prices in Thailand rose by 7.66% in June, a 14-year record driven by rising energy and food costs. Now the University of the Thai Chamber of Commerce, UTCC, is conceding that heightened inflation of between 6% to 7% may also extend into the last quarter of the year, while peaking in autumn at up to 9%. On Wednesday, the Minister of Finance Arkamtermpitai Inset, stressed that there was no capital flight out of Thailand from debt markets. He said his ministry was monitoring the baht, which has just breached the 36 barrier against the US currency. It comes as the country has posted a widening current account deficit in May of $3.7 billion from $3.1 billion in April, with the government hoping that a revival of foreign tourism will help balance the books in the latter half of the year, even though the numbers are still only a fraction of those seen in 2019. On Wednesday, the Thai Minister of Finance, Arkamtermpitai told Reuters that the depreciation of the Thai baht was not being driven by capital flows from the country's debt market, as the baht broke through the 36 to the dollar mark for the first time in over 15 years, reaching a new low against the US dollar, while the Thai currency since the beginning of this year has gained ground against both the pound sterling and euro. Since early January, the baht has gained 4% against the UK currency, which dropped from 44.87 to its recent close at 43.06. Similarly with the euro, where the gain has been 2.46%, with the euro falling from 37.74 to the current value of 36.80. Lack of confidence in the UK and Eurozone economies and low rates has seen gains for the baht this year. The lack of confidence in both economies with rising inflation, negative growth prospects and comparatively low interest rates has translated to both currencies with capital being attracted to the United States, where interest rates are decisively on the rise. Markets are already reacting to a strongly anticipated 0.75% rate hike by the Fed in July. Chief among the reasons for this is the unique impact of the Russian-Ukraine war on the region, but it is also a result of pandemic-era policies and the fact that both the Eurozone bloc and the United Kingdom are still pursuing weaker monetary policies, with both the Bank of England and the European Bank reacting, up to now, indecisively to tackle inflation, as both the British and European economies face steep challenges and strong headwinds, with GDP in the United Kingdom falling by 0.1% in March 2022 and 0.3% in April 2022, even though the first quarter showed marginal growth. Rampant inflation in the UK to hit 11%. In the 15-country Eurozone bloc, the economy grew by 0.6% in the first quarter, but the diverse economy experienced strong inflation at 8.6% in June, following a rate of 8.1% in May 2022. In the United Kingdom, inflation is even higher, hitting 9.1% in May, the highest rate in 40 years, with confident predictions that it will hit 11% in the autumn. In the face of this, the European Central Bank still maintains an effective negative deposit rate for funds of 0.5%, while the interest rate in the United Kingdom stands at 0.75%. The Thai baht has not been valued so low against the US dollar since the latter half of 2006, when the dollar was in the process of dropping precipitously against the baht from 40.85 in December 2005 to a modern-day low of 29.10 in March 2008. Baht is still well within a medium range of its historic values over 30 years against the US dollar. In the mid-1990s, the baht traded stably at a range of 25 to the US dollar before hitting an all-time low of 52.95 in mid-January 1998 after the Asian financial crisis. On Tuesday, the Ministry of Commerce confirmed a 7.66% inflation rate for June 2021, driven by a rise in both energy and food prices for the month. These figures were despite intensive efforts by the ministry to slow down inflationary pressures, which can be seen in data suggesting that the Consumer Price Index only grew by 0.9% in June, slowing from a 1.4% rate in May. Higher energy costs are driving inflation in Thailand, accounting for 61.18% of the price hikes seen. The key driver of inflation in Thailand last month was energy costs, which accounted for, according to the ministry's data, 61.18% of the headline inflation rate for June, while food and non-alcoholic beverages accounted for 34.2%.